Hi, it's Larry Gaines from Options on the Open. I just wanted to touch base and do a quick overview of the markets to show you where we've been and where we're at right now and what potentially we might be looking at. So to do that, I can do that fairly quickly with a long-term chart. This is the S&P 500, the SPX monthly chart. And what I've done here is I've done this in the past. I've just had this trend line, so you can see where we broke down was right here. This is kind of the neckline. There was a head and shoulders if you look at it daily, but it broke down right about here, about 1270. So if you look at the chart where we are now, you can see that we had this extreme sell-off, which came down to about 1098. So this is where it stopped. You had some good support in here, and then we've bounced right here to right here about 1204, and this is about a 9% bounce from the bottom. So this is a 12-month moving average, 12-period moving average here. So we broke this. We've had some major damage to the long-term trend, and we broke the 12-month moving average. Broke it really hard. We've bounced back 9%. You've got next resistance comes in here at 1250 right here, and then we've got resistance coming in here at 1269, 1270, which is right at the 12-month moving average. So if you go back in time and just kind of view and research past history to look at the same type of breaks, let's go back. The last time we had a break like this was back in December 2008. Right where this arrow is, we broke the trend line. We broke down below the 12-month moving average. We had a severe breakdown. It actually was so severe it went all the way to the bottom of the Bollinger Band here. We have not extended down there yet. Then we had a bounce back up, and it bounced around for a few months here. And the best it could do was get back to the 12-month moving average. So right here, and failed again. Normally these markets will not go right back through these major moving averages. They're going to have to test it, and as you can see here, it took it a few months just to get back to the moving average, the 12-month. And then it broke down, had another severe sell-off, did not break back above the 12-month moving average until July 2009. So this is a major obstacle right here, this moving average. So the 12-month moving average, which comes in around 1269. So that's also at the neckline where we broke down. So first resistance 1250, then 1270. So in this area here, this is probably where the market will stop. We could get a retracement back up here from this oversold situation, but the longer term picture looks like there's been severe technical damage done to this market. Now I just showed you 2008, the break, and then the current situation we're in. But if you go back, the last time prior to 2008 when we broke down was here July of 2000. So you can see a similar setup and a similar pattern. We broke the trend line here, severe sharp breakdown, broke through this 200-day moving, not 200, but the 12-month moving average. It retraced the next month, came all the way back up, or actually opened there and failed. So it retraced back from this severe sell-off to here, retraced all the way back, kind of like we're currently now. The next month came in, broke a little bit above, and then collapsed. And then this trend stayed in a downtrend from July 2000 and didn't trend back up until 2003. So these particular breakdowns, when you have this severe type of break, it's a major disruption to the market, to the macro trend, and these things just are hard to recorrect back to the upside. So maybe this will be an anomaly, and it'll be that situation where we'll break back right back up to the upside. But you can see from past history, when we have this major damage, technical damage, it takes a long time to recover. So here we go back through just one last time. See, it trends back up, and then we get up here to December 2008, severe breakdown all the way to the all the way to the Bollinger Band here, and then a bounce back to the moving average, and it fails there and moves all the way back down. So severe breakdown, and then we've had the same situation here. Broke down, it's trying to retrace back up, perhaps it does, but to break back above this 12-period moving average, the first time up should be pretty hard, and you should probably look to sell into it. So I just wanted to point that out. Good luck with your trading, and if you'd like to see how we do our trades at Options on the Open, please come join us, and have a great day, and thank you for your time.